Property depreciation is a deduction that's available to all investors. Now, as a property manager, all of your clients are landlords that are investing in property purely to make money now and in the future. Depreciation is a deduction that relates to a property. It means more cash flow on the way through. The items in a property or in a building wear out over time, and the tax office lets us claim a deduction based on that wear and tear, and effectively it just means more cash in the investor's pocket. Key dates for the purpose of depreciation are something that, look, there's one in 1987 for residential properties that means a client's going to get a bit more deduction than otherwise. Newer property gets more depreciation, yes, but I'd like to forget about dates pretty much, because old property still gets depreciation. It doesn't get as much, but a property manager worrying about what dates matter is not something that's important. Ask a specialist, ask the quantity surveyor exactly, with my older property, no matter what the age is, am I going to get into depreciation? And we'll be able to tell them really easily whether or not they're going to get some. We'll give an estimate of how much that might be before they go ahead and spend any money on that. And we'll have a look, make sure they can get some money, and if they don't get some money, go to get twice the fee and deductions, then we'll give them the money back anyway. Look, the benefits for tenants are really not there unless they're actually a property investor. So I think about 20 or 25% of landlords are actually property investors, so they do have properties. So therefore that depreciation would be available to them if they do own properties. I guess the only other benefit is that the landlord may be able to hold that property longer because they got more cash flow, and therefore the tenant will have somewhere to live for more time. As a quantity surveyor, we're a specialist in construction costing, and we provide an ATO compliant report to the accountant as one of the numbers within that tax return. So we work alongside the accountant to help to maximise this deduction, and we also are able to, or we're recognised by the tax office for the purpose of depreciation and estimating these costs. So they're our friends, we work alongside them, we provide the numbers as part of that tax return, and we help to maximise and get more cash out of them. I think as a property manager, one of the most important things is a little bit of education around what depreciation means to an investor, so that you understand investment and you understand what the important things are to the investors, who are all of your clients. Now, the BMT Hub on RPM Online has a lot of useful information and handy hints and tips on how you can just learn enough to be able to say the right things, answer the basic questions, and get a little bit of education and information so you look like you know what you're talking about with investment properties.